Hi, everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, let's start in the U.S. The past 24 hours have been dominated by American news. What stood out to you most?
It's been a tale of two stories. On the economic side, second quarter U.S. GDP growth was revised sharply higher, 3.8% annualized, which really underscored how resilient domestic demand remains. That strength has forced markets to pull back expectations for aggressive Fed easing. Two more cuts this year now look unlikely. But at the same time, U.S. policymaking has been disruptive. A fresh round of tariffs was announced, this time targeting pharmaceuticals, heavy vehicles, and consumer goods. The move rattled Asian markets and reignited concerns over protectionist spillovers. Interestingly, pharmaceutical companies quickly countered by pledging new U.S. manufacturing facilities, which may blunt some of the near-term impact. And then on the political front, an unexpected twist. Former FBI Director James Comey was indicted. That adds another layer of dysfunction to Washington.
How are global markets digesting this mix of strong growth data and protectionist noise?
It's been a rocky ride. Global equities had their sharpest retreat in weeks. U.S. markets led the way down, particularly rate-sensitive sectors and exporters. Bond yields jumped as traders repriced the Fed path, with the U.S. 10-year pushing higher. The dollar strengthened. Growth momentum plus fading rate cut hopes makes it a safe haven again. Commodities showed a split. Oil edged up on geopolitical risk premiums, but gold softened as real yields climbed. It was essentially a flight to liquidity session. Investors didn't panic, but you could feel sentiment shifting, especially with today's key data point looming, the U.S. PCE price index. Markets are braced for 2.7% on the headline and 2.9% core. If that overshoots, the Fed's patience will be tested again.
Let's pivot to Asia. You mentioned tariffs rattling the region, but there was also a big move from China's central bank. What happened there?
Yes, very interesting timing. The People's Bank of China unveiled measures to deepen the offshore yuan bond market in Hong Kong. The aim is clear: to internationalize the renminbi further and build a credible alternative funding hub outside mainland China. This came right as a U.S. congressional delegation landed in Beijing. So, geopolitically, the signal is that China sees itself on equal footing in shaping the future economic order. It's a long game, but for investors it's another reminder that the balance of global financial power is shifting, and markets will need to adjust.
Back to equities. Alibaba made headlines this week showing life beyond U.S. tech. Can you walk us through that?
Absolutely. Alibaba surged to multi-year highs after laying out a bold plan to exceed its $53 billion investment target in AI and cloud infrastructure. The real kicker was the unveiling of its new Qwen 3 Max language model, over 1 trillion parameters, and a tie-up with NVIDIA to integrate advanced AI tools into Alibaba Cloud. This caught the market's imagination. For months, the AI narrative has been dominated by U.S. names like NVIDIA, Microsoft, and OpenAI. Suddenly, here's a Chinese giant saying, "We're not just regional players, we're global contenders." The rally triggered renewed buying from high-profile tech funds, and you could feel momentum building into a technical breakout.
We also saw HSBC in the headlines with an AI claim of its own. What's the real story there?
Yes, this one caused a stir. At first, rumors swirled that HSBC had developed an AI model predicting stock prices. Naturally, that raised eyebrows, because forecasting equities at scale is incredibly hard. But the actual announcement was more grounded and arguably more significant. HSBC, working with IBM, ran a pilot using quantum computing in bond trading. The hybrid quantum classical model improved predictions on whether client quotes would be filled by up to 34%. That's not science fiction, it's one of the first real-world applications of quantum tech in financial markets. So rather than AI stock picking, the takeaway is quantum is moving from theory into practice, and fixed income might be the first area where it makes a tangible difference.
That's it for this week. Stay tuned for more insights next time.